This is just continuing the strategy that we outlined 2 years ago of moving to this asset-light model, continuing to increase the net income and the cash flow of the business, and finding best-in-class operators to be the partner for Playboy and exploiting those trademarks around the world based on geography and category.
Playboy, the iconic global pleasure and leisure company, just announced that it is selling 50% of its China licensing business to UTG Brand Management for $122 million in guaranteed payments. CEO Ben Kohn is here to tell us about the news and the impact on Playboy. I'm Martin Gagel with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. Ben, great to have you, and congrats on what looks like a pretty significant deal.
Well, thank you, and thanks for having me. It is a significant deal. This is a transformative deal in our asset-light strategy. Not only does it provide $122 million of contractual revenue moving forward, we are partnering with a great partner that's going to make a significant investment into the brand and reestablishing that growth that we had in China before, returning Playboy to one of the preeminent brands in the China market. But it also provides meaningful cash in our debt reduction strategy. And so we've taken our debt over the past year from $220 million to $160 million. And we've committed as part of this transaction using a minimum of $50 million of the proceeds to continue to further delever the company moving forward. And we've done that all without changing our cash flow. So even though we're selling 50% of the business, UTG is guaranteeing us today and for the next 8 years the current cash flow that we make off of China, plus we have 50% of the ups.
All right. And UTG, can you tell us a little bit about them? They seem to have a fair amount of experience and success operating brands and licensing deals in China.
They do. So actually, UTG was a former licensee of Playboy way back 10, 15 years ago. But UTG is the operator for the Jeep brand in China, which does, we believe, in excess of $1 billion. Total turnover for UTG is probably close to $2 billion. They are a true operator. And so this is no longer a licensing business for us. This is really a partnership with UTG as an e-commerce and retail operator within the China market. And so we believe, with the investment that UTG is committing to make into the brand, our business used to do north of $1 billion in China in retail sales. We believe with UTG, we can get back to that level, if not exceed that level.
And it's a partner. You own 50% of the operations there, but are you kind of the operator, or kind of give the keys over to them and they run the show, and you're not a silent partner, but they run it and you're 50-50 on it?
Yeah, so this is actually a deal in which they will be the operator, but what we own is 50% of the IP. So again, our asset-light strategy, really focusing on the IP. We will have nothing to do with operations outside of certain brand things from a board perspective. They will run the business, and then they'll take the profits of that business and move it to the IP co, in which we will own 50% of the business. And from the IP co, we have a license down to OpCo for the business. And so again, we want to make sure that we don't confuse the investors. We don't want to make our lives any more difficult than it already is. We want to stay focused on the IP of the business, which is really that billion-dollar brand within Playboy, with UTG being the operator of the business on a day-to-day basis.
And there are $122 million of guaranteed payments to Playboy Inc. That's not one lump sum payment up front. Can you talk about how that's structured?
Sure. So what we first and foremost, what we wanted was to make sure that the current cash flow that we make out of China today is guaranteed, and we have a guarantee for the next 8 years from UTG. And then in addition to that, there are upfront payments over the next 2 years for them to buy 50% of the business. So actually, in the first year and a half, we will actually own more than 50% of the company, with them eventually getting to 50%. And then in addition to that, in the first 3 years, they are paying us brand support fees as we continue to reinvest in the brand. With the relaunch of the magazine last year, we just hopefully locked in a major celebrity for the next issue that will be coming out in March. We've released 2 issues, and then as we continue to build out our content strategy throughout 2026. And the great thing about UTG also is all of the other operational complexities that we've been dealing with in the United States, managing the China business, the IP enforcement, the IP registration, all of that is now being transferred to UTG. So from a US perspective, it makes our lives much simpler.
And they operate as a local company. So it's local company dealing with local issues with patent infringement and trademark stuff and all that stuff, right?
They are a Chinese-based company, even though they have
Yeah.
operations in other parts of the world, including Canada. But I think, you've seen this trend already with, Starbucks selling a piece of their China business, Gap doing the same exact thing. I think just given the geopolitical climate that we live in today, I think it's very smart for Playboy to have a partner that has real skin in the game. Again, $122 million of contractual cash flow, but that is Chinese and is local. And we have 50% of the ups moving forward. And I think the combination of that, now that we've settled that massive lawsuit we had last year where we won $81 million and in the process of collecting it, having a local partner that can do the enforcement from China versus us trying to do it from California or now Florida, where we're moving the company, will just lead to smoother operations and will lead to more success and upside for Playboy and our 50% share long term than we could do it out by ourselves.
And just to be clear, the 122 million of guaranteed payments, that's the minimum. There's upside to that if they shoot the lights out and business goes as good or better than expected.
100%. So based on their
Okay.
projections that they've given to us, I would expect that, over time we should see meaningful upside to the 122 million. The 122 million is just the guarantee, is just the guarantees. Part of that purchase price, part of that is the upfront brand support, and then part of that is a contractual obligation for the next 8 years to maintain our current cash flow. I would expect that we will start to exceed those numbers relatively quickly with UTG as our partner.
I think we covered all the key aspects of the deal and your China operations. Is there anything we missed or anything you want to sort of highlight or tie a bow on it?
No, I think, look, this is just continuing the strategy that we outlined 2 years ago of moving to this asset light model, continuing to increase the net income and the cash flow of the business, and finding best in class operators to be the partner for Playboy and exploiting those trademarks around the world based on geography and category.
Ben, thank you for joining us. That's a great update and congratulations on the deal.
Great. Thanks, Martin. I appreciate it.